All right. I hope you people have gone through it. The first requirement is evaluate the matters to be considered in the completion of audit and matters to be considered in the completion of audit. The first part. And second part is the audit and explain. The second part is and the audit evidence you expect to find during the review of audit working papers. So now two requirements are here. The first one is lease, the second one is inventory. Audit evidence you expect to find. And we have discussed the difference between audit evidence and audit procedure in very much detail. If you are confused about it in any way, you should go through that lecture where I have explained it clearly with so many examples that what is the difference between evidence and procedure. So 9 marks means 4.5 marks for the first part and the 4.5 marks for the second part. Two parts are here. Now, so same is the 3.5 marks and 3.5 marks for the two parts. The next is evaluate the implications for the auditor's report of Marlos company. Assuming that the inventory matter has been satisfactorily resolved, but that no further adjustment and disclosures are made to financial statements with respect to new property lease for marks. So this is impact on audit report of one matter. Okay, right? So we have to discuss 4 marks. Now, how to attain these 4 marks, I will be talking about it today. So both parts, of course. So first of all, the first issue. So we have to discuss, read the background. It is the first July 20x5. You are audit manager responsible for the audit of Marlos company, and you are completing the audit of financial statement for the year ended this. It is a listed company operating in the retail industry. The following exhibit, so two exhibits are, exhibit one is here. Now, this is telling us finance total assets and profit before income tax. Materiality they have given us. Now, what is the purpose of this materiality they have given? It means we need not to calculate percentage of anything to assets, which we used to do 2 years back. Now, any amount given in the question that will be compared with it to decide that amount is material or not. Okay, I will discuss, I will show you now. So let us proceed further. Next. So where this materiality has been given by the examiner in the question that this is the materiality amount set, we cannot calculate materiality and discuss in the other way that it is 2% of revenue, so it is material, or 7% of profit, it is. No, we cannot do that because materiality has already been decided over here. Now, next. So this, note down this point which I'm telling you. Students, I tell them, but still when I mark their test, when I mark their assignment, they are doing the same blunder, which they are not supposed to do when explicitly I have explained. Now, Marlos company expanded operations during the year and as part of this process arranged a new property lease on 1st April 20x4. The lease contract is for 7 years with a rent-free period of 12 months followed by 6 annual rental payments. The contract meets, now very important, the IFRS 16 leases criteria to be classified as a lease. The financial statement recognized a right of use asset of $228.9 million and corresponding liability of same amount which has been correctly calculated at the effective interest rate implicit in the lease agreement. So they recognize Right of use of asset of this and corresponding liability of same amount. Now, so the next point. Management has not charged any depreciation on the right of use asset, stating that uh, you know that the rent-free period should not be result in an expense being included in the statement of profit and loss. Now, students, first of all, when we are reading it, this is an accounting issue. We must, at the back of our mind, we should be analyzing it with IFRS, what we have the knowledge of. And if we are not doing that analysis and we are unable to do that, so there will be a problem. We cannot solve it. If we cannot analyze it, we cannot solve it, I'm telling you. Management proposes to begin depreciation in the next period and will depreciate for 6 years for which they make payment. The interest expense is related in relation to the lease liability has been correctly wrong. Now, what we need to do, we need to, when I am reading it, we need to identify important facts from this case. The lease started on 1st April. Second fact, 7-year lease with this detail. Okay, so 7-year lease with one rent-free period. Next, the next is right of use asset and liability are recorded at the same amount. Correctly calculated, they said. Okay, we will see. In exam, you have not to write facts like this. I am writing it in front of you how to effectively find relevant data. And we need to analyze it and discuss it properly to score maximum marks. Now, next. The next is management has not charged depreciation for the first year, rent-free period. Next point. They didn't charge any depreciation. And the logic is here. And the logic is here. Now, the point is the matters to be considered. With the requirement is matters to be considered. The first of all, the main heading will be the lease. Marlos company. Okay. This is the question name. So lease. So matters to be considered. First of all, remember I told you, we need to apply MTI to the same. Materiality need to be discussed. Treatment, what IFRS says and apply it to scenario. If given treatment is correct or incorrect, justify. Okay, now, and second thing they said over here, sorry, one thing. Yes, lease liability has been calculated, discounted. Value of implicit rate, yes, lease liability. Yes. Now, this is the whole all facts. So materiality, first of all, the amount involved 28.9 million. What is the materiality threshold? 1.1 million. So it is highly material. So how we will write this? Students, you need to follow my way, my structured approach to right answer. You will never lose marks. Examiner is and kit is giving the similar answers, but they are not following a structured approach. Their answer has the same ingredients. So what I am telling, follow that. So first of all, the right of use asset has value much higher than. So it is material to financial statement of Marlos company. So materiality M. Now what treatment, what IFRS says? Now, so first of all, we will talk about IFRS says lease liability should be recognized at present value on inception of lease payments, present value of lease payments to be discounted at, yeah, payments to be made, yeah, sorry, to be discounted at interest rate implicit in the lease agreed. What is the interest rate decided? The lease payment liability should be discounted as per that present value of those lease payments. Now applying to scenario, this is very important, and they have done the same, you see. So we will call it now applying to scenario. In case of Marlos company, lease liability seem to have been recorded at the same amount as per this criteria. Now come to the right of use asset. What IFRS says? Right of use asset should be measured at lease liability plus any payment already made for asset plus any site restoration cost and any direct cost involved. Moreover, right of use asset should be depreciated over the terms of lease. Now, so here they have measured leased right of use asset at the same value of lease liability. The risk is that, now applying to scenario, what is the risk? The risk is that any restoration cost of site or any direct costs involved may have not been included, which should have been included. Now, this is the risk. Now, impact on I for impact. And hence, right of use asset may be understated. Which item? Now, this next part, which is related to rent-free use, they didn't charge any depreciation, saying that it is for the first year is rent-free. Will depreciate it in the next 6 years when the lease rental has to be paid. Remember, this lease rental payment is just arrangement of payment. It is payment for 7 years, being paid over 6 installments. Remember that. Okay, they have not. So, what they have done? Now, applying to second part, depreciation. We said that it should be depreciated. So, here, terms of lease 7 year. This which is just a payment arrangement of 7 year lease agreement. It's just a payment arrangement. The company has not recorded any depreciation for it, which is incorrect. As depreciation should be charged as the entity has the asset in use, irrespective of timing of payment of lease rentals. So now we are calling it incorrect. You see here the difference. Here we said there is risk that direct cost may not have been involved. Why we said risk here? And we said may be understated because it is not clear from the scenario. It is not clear from the scenario that whether direct cost is there or not. So we as an auditor, we are skeptic. There might be. So it may be missed. So it may be understood. But here it is clear misstatement. Depreciation charge, we said it is incorrect treatment, directly said. You see here, it is incorrect. They should have charged. What they should have done? Now, so the depreciation charge is understated by this amount, total right of use asset divided by number of years. Because it is full year. First April, that I noted down this 1st April because it may be half of the year. You have to be careful. In this question, it is start of the year. You can see year ended 31st March. So 1st April is start of a year. So full year depreciation, which is understated, which is higher than materiality threshold of 1.1 million. And hence non-current assets and profits are overstated and expenses understated. Clearly, we are not saying there is a risk. We are justifying. Now, so the next is evidence. Second part is evidence. Now, this is good for 4 marks at least. At least 4 marks it is good for. But you have discussed materiality twice, 1 mark. Treatment applied, 2 marks and 2 marks. Because 2 time treatment happened. So 4 to 5 marks, this is good enough discussion. Matters to be considered. Now, evidence. You expect to find. Now, my team member should have collected evidence in the audit file. I am going to review their file. So they say that, so first of all, lease agreement is there, right? So I expect the file should have lease agreement copy, which they should have collected, reviewed, and kept that. Reviewed for lease terms, lease periods, payments. So copy of lease agreement. This is evidence. Tangible item present in the audit file. Reviewed to confirm. They should have reviewed it. I am checking the file. In the file, this evidence copy of lease agreement is there. Yes, there. Now I will see whether it is marked, showing it is reviewed to confirm the lease period and details of lease payments to be made. Now, the second point is the lease agreement. The second point is right of use asset and lease liability calculations. Okay. So, first of all, yes, management, my team member should have collected from the management how they have calculated the lease liability and right of use asset. And my team member should have checked that for arithmetical accuracy. Yes, so copy of management calculation. This should be present in the audit file as evidence collected by team. This is evidence, not procedure, remember that. Calculation of lease liability reviewed by my team member to arithmetical accuracy, confirm the arithmetical accuracy of the same. Yes. Now they say that they have recorded that same amount. So same amount. Liability and non-current asset. So auditor will check the non-current asset register and lease liability account. Same amount has been recorded or not. After checking that, they will get extracts and copy of the both places. Non-current asset register copy, relevant page, relevant point, and lease liability account as well. So they will keep that in the audit file. So that should be here. So now non-current asset register extract or copy reviewed and matched with corresponding lease liability recorded by the company. The purpose to verify correct amounts have been recorded. To verify same amounts recorded at both places. So we are trying to check the record. Now they have purchased a property. Okay. So now what we will be doing? My team member will go and they should have physically visited the location, verified the property, and noted down that it is in good condition and in the use of company. So physical inspection evidence of the property. Now the purpose to confirm existence and it is use of the Marlos company. Now, so now they have done incorrect treatment of depreciation. So that should have been discussed with them, with the management, that you have written incorrect notes, credit treatment. Correct it. So now discussion notes with management regarding incorrect treatment of and request made to, yes. So 5 evidences are more than enough. So each evidence is as per scenario. There is nothing generic you can see. All these things, what they are saying, we are trying to verify. There is nothing generic. In AAA, you lose marks when you don't discuss scenario. Examiner wants to see application. They don't want knowledge from you. They don't want generic things. Now, each evidence has one, first of all, result of audit procedure present in audit file. That may be in the form of some tangible item, such as copy, some document, some notes written by auditor. This is the result of audit procedure. Proof. That is evidence. Basically, this is the here copy of lease agreement is the evidence. Here, copy of management calculation is the evidence. Non-current asset register extract is the evidence. Physical inspection notes, this is the evidence. Discussion notes is the evidence with the management. Now, there might be some source. For example, management. Might be. So basically, evidence is also a source. So evidence is also a source. Then reason, purpose to gather evidence. Then action performed on evidence. If I say this is the same thing, the first, okay. Yes. So result of procedure, or which is called evidence. Now you see here. Purpose to confirm this. This is the purpose. To confirm arithmetical accuracy. This is the purpose. To verify. To confirm. Okay. Discussion notes. This is the purpose. Request. Incorrect treatment and request the same. The purpose. Action performed. This is reviewed is action performed. You can see. Reviewed. Reviewed. Reviewed and matched. Physical inspection evidence, automatically it has built-in action performed. Discussion notes with management has automatically built-in action performed. Discussion, this automatically. Now the point is, and it should be sufficiently detailed and relevant to scenario. Simple is that. I have done the similar analysis with you for procedures as well. Okay, students normally come to me, Mr. Hamzah, we may fail. There is an examiner article published. We are not prepared for that. For example, they come to me and they are just like that. They're feeling like they're failed. I ask them, okay, article will be tested for 10 marks, for example. Are you ready for remaining 90 marks? How much confident are you? Remaining 90 marks. They say, oh, Mr. Hamzah, sorry. You are not certain for those marks which are most likely to be tested, which are going to be tested. And you are concerned about those 10 marks where you are doubtful. Isn't it foolish attitude? So those 90 marks where you can get 50 marks easily. There was one of, and I have seen so many students. Every second attempt, I find 2-3 students, they come to me, Mr. Hamzah, we have solved only 80 marks paper. I say, okay, 80 marks paper you solved. 80% paper you solved, okay? We missed 1 or 2 parts, okay? What about those parts you solved well? Have you solved them as per the techniques I told? I say, Mr. Hamzah, sorry, we are not sure. I say, you must be sure about that. And I know the student who solved for 75 marks and they passed the paper by 62, 63 marks. Just because I'm not encouraging that you should not complete the paper. No, I'm just telling you that what is predictable, you are not preparing that well. And what is unpredictable, you are running after that. 85 to 90% paper is predictable. And you are not thinking about that? Now, the next point, the next part. Inventory. Now, inventory, second part. Marlo's company has recently negotiated agreements with new supplier. Included in the contract is a clause which allows the supplier to require return of the product at any time. Okay. Marlo's can also return the products within a set period of time if they remain unsold. Inventory purchased, so means that supplier can also require return anytime. So Marlo's can also return if after within a certain period of time if it remains unsold. Inventory purchase with the supplier is $8.1 million included in the company's financial statement as inventory at 31st March. These amounts are recognized at cost, which is lower than NRV of the products. Now, the point is, cost is lower than NRV. Okay, so rightly recorded. So, what is the issue? The point is, first of all, material, you have not to forget the format MTI, materiality, treatment, applied to scenario, impact. So first of all, 8.1 million material, higher than overall materiality level, which is 1.1 million here. So now what IFRS is saying? So IFRS says that a sale can be recognized only when performance obligation is satisfied, control is transferred. Here Marlo's has the right to return the inventory. Supplier has the right to demand the return at any time. So it means that whenever the if the inventory purchased from this supplier is in stock, it is consignment stock arrangement. It is property of supplier. They can require the return unless it is sold to the customer of Marlo's. Supplier, Marlo's, Marlo's customer. It is with us with the Marlo's. Inventory is with the Marlo's. It is still property of, they can, because they can require return at any time. You see here. If any time. Okay, now. So it is unless sold to the customer of Marlo's company and the title is transferred when it is sold, when Marlo's sells that inventory to its customer, the title is transferred from supplier to the customer of Marlo's. Three parties are there. And then they can recognize and title is transferred. Or any point reached as per agreement when this inventory is not returnable or supplier cannot require the return. Any condition is met. So here they have recorded the inventory 8.1 million. So how they should record? This inventory of 8.1 inventory of supplier. It should not be recognized. Rather, they should record the payment made to supplier 8.1 million as right to refund. Right to Marlo's can refund and get refund. And it should be recorded as receivable. And this inventory should not be recorded. So, which is it is incorrect. So, inventory is overstated, receivables are understated. Now, come here, we will draft the answer over here. So, first of all, Materiality of the matter matters to be considered. Higher than the overall materiality level set for audit. So it is material. What IFRS is saying? IFRS 15 says yes, is transferred. So, but now applying to the scenario. So applying to scenario, here in this case, they have right to return unsold for a specific period. And supplier can demand return at any time. So it means that inventory is held at consignment stock arrangement by Marlos company. Now, so applying to scenario, the inventory held with it is the property of supplier unless it is sold to the customer of Marlos. And title is transferred from the supplier to the Marlos company. Or Marlos can as purchased when there is no right to return to the supplier, or when such condition occur that supplier can no longer demand return of the inventory. So three cases they can recognize their asset. First, it is transferred to the sale to the customer of Marlos. Second, Marlos cannot return. That time elapsed. Or when it happens, supplier can also not demand. Right? Here, Marlos company has recorded 8.1 million inventory with a cost of 8.1 million in its financial statements, which is actually the inventory of the supplier and should not be recorded. Should not be recorded. Instead, amount paid to supplier in respect of this inventory, in respect of this inventory, should be recorded as right to refund. A receivable. Yes. So now this is incorrect treatment. Hence, inventory of the company is overstated and receivables are understated in financial statement. Impact. Now, being auditor, we need to verify the nature of the contract, details, purchases, payments. Okay? And again, incorrect treatment. The first thing first, the evidence. So as an auditor, we will check copy of that should have been checked. copy of contract with the new supplier, reviewed to confirm the sale and return arrangement and any conditions attached. Right? So, second, copy of inventory record review to confirm the unsold inventory value at year end, which was purchased from, so that to verify it is correctly recorded or not. The next point is, if Marlus has refunded any amount, any inventory, returned any, so whether they have received refund, so extracts of bank statement showing refunded amount for supplier for return of inventory by Marlus, if any, to verify this arrangement is actually working or not. So discussion notes with management about incorrect treatment of inventory and request made to correct that in accounting record. So now you see here, it is for the 7 marks. Okay. So 4 I have written evidences, that's enough. But the next part is evaluate the audit report, assuming that inventory has been solved, but no further adjustment have been made regarding the new property. New property, now impact on audit report. The first of all, how to solve such 4 marks? How to solve such question? So impact on audit report. How to solve such question? First of all, again, what are the ingredients? We discussed the issue, materiality. What is the issue? It is misstatement, understatement, overstatement. It's materiality, and pervasiveness is discussed and justified. And justified. Then why it is pervasive, why it is not pervasive, why it is material, why it is not material. You have to justify. If you are saying it is pervasive and you are not giving that how it is pervasive, you will not get any mark, or vice versa. And then afterwards, so the 1, 2, third, what is impact on audit opinion? What type of opinion will be given? And what will be the impact on basis for opinion paragraph and its content a bit. So 4 marks in this way, 4 to 5 marks normally it is tested. Normally it is tested. So here they have not fixed the matter of depreciation, 4.1 million. They said that inventory issues resolved, nothing else done. So you see here, we will write the answer. So first of all, the issue and materiality. Merriman has not recorded a depreciation of 4.1 million. Hence, so first of all, issue. Hence, financial statements are overstated. Misstated and profits are over 4.1 million. It is material misstatement as materiality level decided of 1.1 million. So materiality justified by this line. Now, why it is not pervasive or why it is pervasive, we need to explain. And it is single misstatement confined to one item. Now, confined to one item. It is not separate. And one item not substantial. This is logic, which is giving the verdict. It is not pervasive. So now it is not pervasive. So misstatement is material but not pervasive. So qualified opinion due to material misstatement in first statement will be given. What is the impact on our opinion? Presentation. Just see here. Such as some wording, except for this matter, financial statement give true and fair view of company affairs. This is very important. A bit, yes. So this will be given. Now, yes, this will be presented in the qualified opinion paragraph at the start of our report. Now, structure, content, we are talking, and followed by the basis of qualified, explaining the reason for qualified opinion, quantifying the impact of misstatement on financial statement as well. Now, this is 4 marks answer. It is in front of you. Now, if you will not practice it when you are writing answer, and you are just listening to me, you say, Mr. Hamzah, you are doing a great job. What a wonderful explanation of marks and allocation. But yes, when I will write, I will not follow your answer, your approach. I will follow my